In today's video, we are talking about how much to invest for retirement. This is key to know so that we can actually retire or become financially free. In today's video, I'm going to show you exactly how to figure this number out and how much you need to be investing every single month in order to reach your financial freedom number. All right, I want to break this down for you and show you exactly how much to invest for retirement. And not just that end goal number, that financial freedom number, but how much you're going to need to invest along the way in order to get to that final number. We're going to take a look at a calculator and see exactly how we can do this. So the first thing that we want to do is to figure out our financial freedom number. Essentially, we are going to take our annual expenses in retirement and multiply that number by 25. And that is going to be the amount we need to have invested in order to retire. So, for example, if our expenses are $40,000, we multiply 40,000 by 25, and we get $1 million. We need to have $1 million invested in order to retire. So how much do we need to be investing along the way to get to that $1 million when we want to? Let's take a look at a calculator and figure this out. Okay, this is the Networthify calculator. You can go to networthify.com and pull this calculator up and input your own numbers so you can figure this out for yourself. But let's go through a couple of examples together. So we can enter our current annual income. Let's say we are making $75,000. So we'll type in 75,000 and then our current annual savings. And this we can enter in the actual number or we can enter in the savings rate. So let's say we're saving 20%. And this is actually investing. We aren't just putting this into our savings account, we're putting it into investments. So by entering our savings rate at 20%, we can see that our current annual expenses are $60,000 and our current annual savings amount is $15,000. And then we can enter in our current portfolio value. So how much ever we already have invested. Let's say we have $200,000 already invested. And then if we click on show more options, it gives us our annual return on investment. So this is the rate of return we are receiving on our investments. And they have the default at 5%. I'm going to change this to 7%, but of course you can enter in whatever number you feel comfortable with. And then you can enter in your withdrawal rate. This is the amount you're going to be taking out every single year. And this is adjusted for inflation. I'm going to leave it at 4% because of the 4% rule. And I do go into more detail about this in another video about the 4% rule. I'll leave a link to that above. You can check it out later on. But these are the numbers we're going to enter, and then you can hit crunch the numbers and it will give us the data below. So we can see we can retire in 21 years if we are investing 20%. And this even shows us the amount we need to be investing. It says monthly savings, but it's the monthly investment amount. So we need to be investing $1,250 every single month in order to reach this goal. And if we scroll all the way down, we can see that our financial freedom number is going to be about $1.5 million. And that is based on this current situation. So if we play around with these numbers, we can see if we increase our investment rate to 30% and crunch the numbers, we can retire in 16.9 years, so about 17 years, instead of 21 years. You can see the drastic difference this makes by investing as much money as possible as soon as possible. And also, if we are increasing that savings rate or that investing rate, that means our expenses are going to go down as well because we left our annual income at the same, at that $75,000. But if we are investing more of our money, then that means our expenses are only $52,500 compared to if we go back to 20%, it would be $60,000 were our annual expenses. So if we are able to figure out ways to invest more of our money without increasing our income, then we're actually reducing our expenses and we are reducing our financial freedom number. So if we go back to the bottom, if we turn this back to 30% and we go to the bottom, then our financial freedom number becomes about 1.35 million instead of over $1.5 million. So this is a really fun calculator to play around with. You can enter in your own numbers and decide, okay, if I wanted to retire in 5 years, how much money would I need to be investing? And what would my expenses need to be? So let's just do one more example. If we are actually saving or investing 50%, then we can retire in about 10 years, right? So that took us down from 21 years to 10 years. So it makes a big difference, the amount that we are able to invest. And just to go back to that 4% rule, that withdrawal rate of 4%, the rule suggests that you can withdraw 4% of your money every single year, adjusted for inflation, and most likely not run out of money. It's not a 100% guarantee, but it's a pretty high percentage. But if you are worried about running out of money in retirement, you could reduce that 4% to maybe 3.5% or even 3%. So if you wanted to reduce that withdrawal rate to 3% instead of 4%, you would take your annual expenses, that $40,000, and then divide it by your withdrawal rate, that 3%, for example, and then that would give you the amount you would need to have invested. So if it was $40,000 and then a 3% withdrawal rate, it would be about 1.33 million you would need to have invested instead of just 1 million at the 4% withdrawal rate. And I personally feel comfortable using the 4% withdrawal rate. I've seen the study that has been done, and if we are investing 100% or even the majority of our money in stocks, then a 4% withdrawal rate is pretty safe. And I'm also willing to be flexible during retirement. If I plan on taking a vacation one year, and the stock market is way down, then I can delay that vacation and take it the next year or even the year after. So as you are determining how much to invest for retirement, use numbers that you feel comfortable with. We used 7% for the rate of return, but if you don't feel comfortable with that, you could even lower that to 5%. Or if you think that is too conservative, you could increase that to 10%. You just want to feel comfortable with the numbers that you are running. And if you're not okay with a lot of risk with having the majority in stocks, then I would definitely reduce that rate of return to something a lot lower. Because with me feeling comfortable at 7%, on average, the stock market has returned around 10%, and inflation is usually around 3%. So I just subtracted the 3 from the 10 and I got 7% for my rate of return. But if you're only investing in bonds, bonds have not returned 10%. It's been a lot lower, maybe 5%. So you'll definitely want to use a lower rate of return. And then as you're running these numbers and seeing exactly how much you would need to invest in order to retire when you want to make sure that you are still investing as much as possible as soon as possible. If you are doing that, you can boost your numbers even quicker. And if you want help investing in the stock market, I have a free masterclass going over how I can help you invest in the stock market very, very simply and even automate your investing so you wouldn't have to think about this over the years. I will leave a link to that below in the description, and you can click on that and watch the free masterclass. Comment below and tell me if you have already started investing your money. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.